L&T Finance. Let's chat with the management then. N. Shivaram, President and whole-time Director at L&T Finance, joins in on the show. Mr. Shivaram, hi, morning. Walk us through what the margins and spreads have been like this quarter.
Whereas for L&T Finance, we have seen an improvement in the margins of about 20 basis points. Of course, this is on the basis of similar levels of gearing as compared to the previous quarter. So it has been an improvement on the back of the borrowing costs coming down, as well as the effect of all the interest increases we have put in place over the last 3 quarters or so. Going forward, definitely we can expect a stable interest rate environment, if not an improvement from where we are today. The governor's announcement today on reducing the CRR as well as the repo rate should help in marginally improving the borrowing cost for the 4th quarter. I think I would consider this more as a first set of steps first set of monetary steps to improve growth in the longer term in the country. So I would expect further improvement coming through in the future quarters and in the immediate quarter.
But unfortunately for the quarter gone by, your asset quality has deteriorated. Why is that?
It has, I wouldn't say whether it is sharply. It is definitely it's a matter of concern for us. But I think if the environment where it was, clearly that this was a situation that will come. In fact, even in the previous interactions, we had indicated that we might see some more slippages coming through in the quarter of ending December. So it's not surprising for us. Going forward, I think we might see maybe one more quarter before we will see some improvement coming through in the NPA levels, because despite all the improvement in the sentiments on the back of the government's announcements on the reform side, the action on the ground, the situation on the ground is yet to improve. The constituents do suffer prolonged working capital cycle and liquidity issues. So consequently, we do not see that dramatically changing in the 4th quarter. It will be in addition to the existing borrowers might end up becoming slightly weaker than any major new stress areas coming through.
Give us some color then on what your disbursements and loan growth have been like this quarter, and do you see a slowdown?
Well, the current year growth has been driven by significant number of refinancing opportunities in the infra segment, and also the rural products finance, which has shown good growth in the current quarters. But going forward, I think we need to be a little cautious on the rural segment, given the lack of monsoon, or rather the low crop output expected in the southern region especially. And as far as the infra segment is concerned, we will continue to look for growth by disbursement to some of the larger corporates, quality corporates, which would help us drive growth to a large extent in the current quarter. Next year, it of course depends on what is the budget announcement and the steps that the government will take to build the confidence in the investment side. My belief is that it does offer on a medium-term basis, instead of talking about 1 year, we can easily see a growth of 25 to 30% on disbursement and consequently the book size.